What's going on? What's going on? What's going on, everybody? I'm excited to share this. This is my first time doing this, so you all are the guinea pigs. So all of my mistakes I'm gonna make on you all tonight. So I hope y'all okay with that. But it's gonna be fun. I believe you're gonna learn something, and I believe you're going to be excited about the possibility of making money in minutes. Knowing what I know now, I probably would have started doing this prior to traditional Forex trading. But at any rate, we got it now. Another arsenal I can add to my ability to multiply money. So I love it. I love it. So with that being said, let's go ahead and get into it. I'll entertain questions at the end. And I want to make sure that you all can hop on some live sessions tonight. I'll be doing some live sessions myself soon, but I want to make sure you all can get on some live sessions tonight and make some money in minutes. Everybody good with that? All right, let's do it. Let me get set up. Get my slides in order. All right, let's do it. All right, what is HFX? What is HFX? I need a volunteer, somebody who does not mind being an additional guest who can admit people to the presentation while I'm doing this, because I don't want to have to keep going back and forth. So if you don't mind assisting me in admitting people, let me check the chat. Chi, I appreciate it, Queen. I'm about to promote you right now. Bahamas traders in the house. What's up, Bahamas? All right. So let's talk about this HFX, the art of making money in minutes. HFX is just a fancy term that we use here for binary options. That's all it is. So some topics we're going to go over tonight is the different order types, what a strike price is, very important. We're going to talk about how to determine your potential profit, and probably the most important thing, how to protect your money. So determining your risk. So the topic of this is just to introduce you to the basics so you have a better understanding of how we're able to consistently generate profits using binary options. As I said, I'm new to this. As you know, been trading traditionally for a while, been able to generate some substantial profits there, but I am now in love with binary options because it does not take me as much time, and I can make as much or more in a fraction of the time when I was trading traditionally. So I'll be monitoring the chat and then we'll get into it. So what is binary options? That's just a fancy term. It's a financial exotic option in which the payoff is either some fixed monetary amount or nothing at all. So it's all or nothing. You either win partial or you lose all. So it's very important that you understand that. We'll get more into that later, but when you're talking about binary options, it's all or nothing. And it's time-based trading. The term binary, it just means two. I remember in mathematics, people used to say, when am I going to use this? When am I? Well, we use it every day in trading. All that stuff you thought you wouldn't use, lines, slopes, binary, all of that, all inside of trading. So the two options, when we're talking about binary options, is either a put, which is a sell. And on a put, all you want to know is, will price be below my entry when time expires? Oh. Chi, you got my waiting room?
Yes, I do.
Oh, okay. It's like 87,000 people waiting.
I don't know what.
I'm just playing. I appreciate you. So we got to put where you want price to be below your entry when time expires. And then the other option is a call, which is a buy option, where you want price to be above your entry by the time expires. So time, very important. This is time-based trading. It's not like traditional trading where you can be in one trade for 15 minutes, an hour, 4 days. I've been in one trade for literally 2 weeks. It was on gold. 2 weeks. Here, that doesn't exist. The longest I've been in a trade is about 4 hours because I didn't really understand what a rollover was, which we'll get into in a little bit. So it extended my trade for 4 hours. Now, thankfully I won, but that's what it was. So there's certain elements of binary options that you need to be familiar with. Of course, there's the payout, which is your potential profit. And in binary options, it's flat. It's a flat percentage based on what the broker is willing to pay out. And I'll show you that here in a little bit. Then, of course, that's the risk. Unlike traditional trading, where we tell people to maintain a 3% or no more than a 3% risk management, most people don't know how to calculate that. I get questions all of the time. How do I calculate my stop loss? Well, your stop loss is based on what you're willing to risk and a lot of other things. We don't have that in binary options. If you have a $100 account and you're aware that you shouldn't be risking beyond 3%, then the max you enter is $3. That's the most money you can lose, $3. If you lose your trade, you lost $3. That's it. You know, in traditional trading, even though you may have a 20 pip stop loss at a 0.05, if price flies through your stop loss, you could lose more than you planned. I've had that happen a number of times. I had my stop loss and there was an abrupt fly through and I lost more than what I anticipated. If you want, please make sure you mute your mics. Appreciate it. So again, in binary options, it's flat. If you know that you don't want to risk more than 2% and you have a $100 account, then you enter $2 as your order amount, which I'll show you in a minute. We went over what a put is. It's a sell option. We went over what a call is. It's a buy option. There's something called a rollover, which I love and hate. Also, not all brokers have rollovers, but what a rollover is an option to extend your time. So for example, if you're in an option for 2 minutes and you click rollover, it extends your option by 2 minutes, but it comes with a 30% penalty each and every time you roll over. And I'll show you that in a minute. And then there's the double up. A double up is simply where you know you have a good option, you know it's going to win. A double up allows you to double up on your risk. But the difference between it and a rollover, a double up does not come with a penalty and it does not extend time. So if you're in a 2-minute option, a 2-minute trade, and let's say you're 30 seconds into that trade, if you hit double up wherever you are, it will enter another option wherever you are, and it does not extend your time. So I've used double up quite a few times when I know, like I know I'm in a good option. I'll hit double up a couple of times to increase my profit potential, but it does increase the risk. So it's just like a new order. Well, that's exactly what it is. It's a new order. And I'll show you all of this here in a second. Let me make sure. Oh, Nigeria in the house. Nigeria and Bahamas. Okay, we international players now. All right, so let's get back to it. Cool. Went over that. All right. So first thing, as you can see, this is actually a video of a live broker. This is Vibe Forex. This is one of the brokers that I have. The first thing we want to look at is your potential payout. And before I get to that, there's a lot of things that I need to point out here, which I'll add to ongoing trainings. But as you see, this looks like a EKG, a heart monitor. On most brokers that I use anyway, you can switch back and forth between this particular layout or traditional candles. So everything that you may be used to seeing on TradingView, you can literally switch back and forth on the broker. I'll show you how I do it when I get into live trading, but I keep mine on the line chart on my particular platform. It's just something about it. I've grown accustomed to liking it, so I just keep it here. If you look on the left, over here, you'll see different currencies. You'll also see CFD Forex and options. I don't do futures. I believe that's what it is. I don't do futures. That's outside of my skill set. I keep it on currencies and I keep it on options. Something also that's interesting about binary options, you can trade it 24 hours a day, 7 days a week. Now, my personal experience, I would rather, especially if you're new, I would rather you not trade on the weekends or when the market is closed. Because if you look at this monitor, you'll see a lot of flat lines. During the weekend, you get a lot of flat lines and then you get like ridiculous spikes. It is so unpredictable at times. So if you're new, I would recommend just stay away from it on the weekends. Now, I've traded on the weekends and I've experimented, and I don't know what it is about me. I experiment with real money. So I've traded gold on the weekend. I've traded Bitcoin on the weekend. Very volatile in terms of the spikes, but you get a lot of flat lines, which is, you don't really want that in binary options. And then all of a sudden you'll just get some weird spikes. So also, if you look closely in the middle of the price action, you'll see the pair CAD chef next to a magnifying glass. You also see the time. Make sure when you're trading that you select the appropriate pair. In the beginning, I've had some slip ups. I'll look at a chart on one page and I'll come back here, think I'm on the same pair as I was looking at, and that wasn't the case. So you want to make sure that you select the appropriate pair. Also, if you look on the left where they have the various pairs, every pair has a different percentage next to it. What I found, the more unpredictable the market, the higher the payout. Now, personally, I don't trade anything less than 70%. Excuse me, to me, it's just not worth the risk. I generally trade 75% and above. So that's what I look at first. I look at what the payouts are. From there, I go to the pairs that I trade, which I'll show you here shortly. And then I open up my currency strength meter. So I have my currency strength meter. I have my TradingView HFX pairs that I trade, and then I have this open. So on the payout, in this example, CAD Chef is paying 75%. Remember, I told you it's flat. So you know exactly how much you stand to win if you trade. So whatever your risk is, In this example, the risk is $6 on Vibe Forex and on IQ Cent, which is another broker that I have. I don't believe they do it on Pocket Options, but on Vibe Forex and IQ Cent, as soon as you enter an option, your money is gone. So if you enter an option here, your $6 is gone. If you win the trade, they give you your $6 back in addition to the 75%. Does that make sense? $6 and then the 75%. So I need to check this. Let me check something real quick. Cool. Appreciate it. Checking my messages, people who are on here watching. So appreciate that. All right. So if you win this trade, you win a total of $10.50. So no more trying to figure out what your stop loss should be, how you calculate your 3%, all of that stuff. It's simple math. If you're not good at math, you take a calculator. If you have a $100 account, you go to your calculator, you multiply 100 times 0.03, which will give you $3. That's what you enter as your risk. Now, that's the payout. That's the 75%. Then we have something called the strike price. The strike price is the price you enter when you take your option. So in this case, if we were to take an option right now, the strike price would be 0.68977. So if you enter a call for whatever time you use, you can go between 1 minute to 30 minutes on turbo. It's something else I have to add. You can change the type of orders. It can go turbo. I believe it's intraday on Vibe Forex. And again, I have to look at it. I didn't even think about this, which I'm glad I'm doing it now so I can add it. But for binary options, I keep it on turbo. The max here is 30 minutes. Also, customarily, you want to keep your fixed time off. Well, why do you keep fixed time off? This is what I've learned. Let's say we're entering a 3-minute trade. As soon as you enter that order, there's a grace period with Vibe Forex. I don't believe the 3 minutes starts exactly. I believe they give you a little grace period, but let's say you're into your 3 minutes. If fixed time is off, they give you sections within that time where you can enter another order without adding a total of 3 minutes. So let's say we're 15 seconds inside of the order. You'll see a little line, and I'll show you when we live trade, where you can enter another order and it won't extend your time. So that's good, again, if you know you have an excellent option and you want to enter another trade, and you can do that without extending your time. So the strike price, though, that's the price that gauges your trade. And you want price to be below your strike price if you do a put. So again, 3-minute trade, you enter a put. You just want price to be below your strike price when time expires. If you enter a call, you want price to be above your strike price by the time your time expires. Binary options is very simple. It's the only 2 choices, put or call. Most brokers I've seen, the buttons are red or some rendition of greenish bluish. That's it. Buy or sell, red or green. That's it. If you can press put or call, you can make money on binary options. So we went over this. Put is a sell option. You want price to be below your strike price at time expiration, and then call is a buy option. You want price to be above your strike price when time expires. Here's the rollover. If you know you have a good call, you know your option or your direction is correct, but you're running out of time. So in this case, if you look closely, this was a live trade. My time is 2 minutes. So if you look to the right, you'll see the balance at the top. You'll see the option type, it says turbo. You'll see the time, it says 2 minutes. My fixed time is off. The amount is $1. This is on a NZD USD that's paying 80% at this particular time. That's why you see the profit 0.8. So within this 2 minutes, if I still have time, now the platform determines this. It doesn't give you a rollover with 5 seconds left. If let's say it's a 2-minute trade, I'm in the trade for less than a minute and price is going opposite of my option, but I know that I just need more time. That's when I click the rollover button. The rollovers come with a 30% penalty, but they also come with a 30% reward. So when I click rollover, whatever my time is, it doubles it. So if you recall, I said the longest trade that I've been in was 4 hours. Well, I believe I was taking a 30-minute trade because I was still learning. I was taking a 30-minute trade because I still had traditional Forex in my head. I knew my direction was good. I trusted my analysis, but I was running out of time. So I hit rollover. It took me from 30 minutes to an hour. Still trusted my analysis, but time was catching up with me. So I hit rollover again. Now remember, I said rollover doubles your time. So 30 minutes took me to an hour. I hit rollover again. It didn't take me to an hour, 30 minutes. It doubled my time. I was in an hour trade after the first rollover. So it took me to a 2-hour trade. Still trusted my analysis, still trusted my direction, running out of time. I hit rollover again. So now my 2-hour trade became a 4-hour trade. So every time I hit rollover, it doubled my time. It also tacked on 30% of my current risk. So at the end of 4 hours, by the time everything was calculated, I think the trade ended up being like $84 or something like that. So that's still good though for a 4-hour trade. You know, some of you been in traditional Forex trades for 4 hours and made $2.30. So it turned out to be a winning trade, and it turned out to be a decent amount of profit, especially if you always got to put everything in perspective. $84 to a lot of people may not be a lot, but I want you to think about this. Number one, I made it from home. Number two, it was 4 hours. So if you do the math, that's about $21 an hour. For some people, that's not a lot. But for most people, not just in America, but around the world, if you can make $84 in 4 hours, that's a good day. In some places in the world, that's a good week. In some places in the world, that's a good month. That's the power behind learning this skill set, learning how to multiply your money. I always tell people to compare it to a traditional savings account. You can put $100 in a savings account. You can put $100 in a trading account. For people who are big time traders, $100 is not a lot. But if you're just starting out, $100 is a good place to start. In a savings account, at the end of a month, that $100 may be $95 depending on who you bank with, because some banks charge fees. But here, learn the skill set, be patient, practice, develop your skills. Let's say conservatively, you're able to turn $100 today at the end of a session to $112. Doesn't sound like a lot, but that's a 12% return on your investment. There's nothing out that will give you a 12% return in a day. Most things won't give you a 12% return in a year. That's why this is so powerful. If you're disciplined and if you're patient, you can literally compound your account to 6 figures, even 7 figures. That's the potential that you have here. So the next thing after my little rant is a double up. Double up is similar to a rollover. You know you have a good trade and you just want to double up your potential profits. The difference is a double up does not extend your time. So this same example, this is a 2-minute trade. If I know this is a good call, which this was not a good call, because as you can see, this is a call and you can tell by the color is green and price is way below that line. But I just wanted to do something to show a real live situation. But anyway, let's say I'm in this trade. I trust my analysis. I want to extend my profits. I hit the double up. So it'll give me the exact same order without penalty and without extending my time. But it's the same risk. So if I lose twice what I was willing to lose with just a single order. On the other side, I win twice my potential profit. So that is the power of a double up. Let me check the chat just to see if there are any questions.
Can I ask a question?
Absolutely.
So I just did a double up on Aussie Chef, and that went for a win. But the here's what I don't understand. If your strike price, let's say you call your strike price where it is currently. Wait, go back to your screen.
Oh, I was coming back to see you. Let me go back to my screen. Go ahead.
Yeah, so let's say you call your strike price exactly where you called it, and obviously like price is down below, but does when the time expires, when you call the double up, wherever that, does it matter where the second price was called?
Good question. When you do a double up, it gives you an entry at that particular location of price. So it doesn't give you the same price necessarily where you entered the first option. It gives you the price where you hit the double up. Does that make sense?
Yes, but what if the because this just happened to me in Aussie Chef, and I was trying to get a screenshot to show you, but what if one of them is okay, this is a call, so what if one of them is actually above and one is below? Does that make
Well, if it's
sense?
a call, the one that's below, you're going to lose.
Okay, so it's like you split.
Mm-hmm.
Okay, got you. Okay,
Yep.
cool.
Yes. Everything is based on the strike price at the time of your order.
Got it.
So
Yeah.
even on a double up, you can enter a call and price is fluctuating.
Yeah.
When it drops, you enter double up and it enters you right there without extending your time.
Okay.
Now, also, double ups are time sensitive. You can't enter a double up when there's only 5 seconds left.
Right.
Yeah, that
Um
would be cheating.
I actually tried that. Um okay, yeah, I get that. So essentially you do have the potential to split one on one on the double up.
Yeah.
Got you. Okay, if we have time to go live, might want to look at Aussie Chef, but that's all I got. I just that's the part I need clarification on. Thank you, sir.
Okay. All right. This is an example I'm going to show you of when I enter puts. So remember, a put is a sell option, and you want to enter puts when there are clear downtrends or clear opportunities for reversal. So for example, price is in a downtrend and then it reverses. Price will always reverse. It always. If you've traded 2 days, you know this. If you traded 2 days, you probably know it more than most, because on the second day, everything goes against you. But you're in the downtrend, then you get that retracement or that pullback. So I guess reversal is not the appropriate term. Reversal is a change in direction, like a breaking structure. That's a topic for another day. But you get a retracement. Then you get a continuation. That's where you hit that level of resistance. Ideally, you enter the put when you hit that level of resistance, where you know that price does not want to break above a certain level, and then we get a continuation. That's where you want to enter your put. That's where your strike price occurs. And then you get the continuation in the downtrend. If price is below your strike price when time expires, you win that trade. It's that simple. It's literally that simple. Now, it's not that easy. It does take some skill, but that's how simple it is. So, you know, we have access to live educators. So if you're new, I encourage you to hop on the platform when we're doing a live session. Sessions are an hour. I've seen as many as 20 trades in an hour. I've seen as few as, I've done hour sessions and I've taken 2 trades. So it all depends on your analysis, your confidence, and of course, price action. So when the educators are on, the educators will give you the call. And by call, in this case, I mean the order. The educators will give you the order. Just pay attention. So for example, they'll say, we're going to take a call on GBP USD at 535. They only call the last 3 digits, because in binary options, we're working with pipettes, not necessarily pips. So every digit counts. Price reaches 535, you enter as quickly as you can. Now, you more than likely, you won't get it exactly on that, especially if this is your first time. I've entered orders. Let's say, for instance, I'm doing a call. My price is 535. I've pressed the call button, but price has shot up. And then it enters me when price has shot up, not where I wanted it to enter. So sometimes you have to be quick on the draw. But again, all you want is price to be above that strike price at the end of 2 minutes. If that happens, then you win the trade. So here, you enter that call, you wait your 2 minutes, you just hope it's above your strike price. So what I want to do now, I want to trade live. We're going to actually go live into the markets so you can see how it works in real time. While I'm doing that, is there anybody that has a question that they want to answer? Let me check. Oh, it's live now. So hop on a live session. I'll do live later. You all go hop on one of the live sessions. Take advantage of the millionaires that are on, and we will pick up a live session opposite the live sessions at a later date, because I really want you all to get access to that. So send your questions to the chat. I appreciate you all hopping on, and we will do this again. I appreciate you all.
Thank you, Doc.
Thanks, Doc.
Thank you.